Do not pay off your mortgage. That's right, I said it. Do not pay down your mortgage. That's right. As you pay down your mortgage, refinance it back up, 80% loan to value, you do not want to pay down your mortgage. Other debt, okay, I get it. Credit card debt, of course. Student loan debt, of course. Other bad debts, auto loan debt. Why do you even have auto loan debt? It doesn't make sense. Do not secure debt against assets that do not cash flow. It's not a smart idea. You want to secure leverage, you want to secure debt against cash producing assets and ones that service the debt for you. Your property should be producing, if you're house hacking, enough income to pay the mortgage itself. If it's not, okay, maybe it's your primary residence and you don't want to rent out any space. Why? Is my first question, because I'd always have a duplex or a garage or something I can rent out that'll help offset my mortgage. I just like living mortgage free with a mortgage because you don't want to tie up a ton of capital in a property, right? That's producing nothing for you, right? If you have a paid off mortgage, especially if it's a rental property, if you own a property outright with no mortgage on it and it's commercial, it's residential, whatever it is, it's not sound advice. And you know what? There are caveats to that. Obviously, it makes sense to pay off your debt if, of course, you maybe you're really old, you're nearing retirement, and you're worried about, what if I can't pay those mortgage payments, et cetera, et cetera. I don't have the cash flow to do that. My argument would be, lever up a property, right? Lever up being get a mortgage, put a mortgage on a property, 80% loan to value. You now have, let's say a $100,000 house or a $200,000 house, you now have $160,000. So on a $200,000 house, you pull $160,000. Put the mortgage down, they pay you out, they write you a check, the bank writes you a check, $160,000. Take the $160,000 and buy 4 more properties, right? So 20% down, 200,000 is 40,000. So 40,000 divided by 160 divided by 40 is 4 more houses. So you could buy 5 properties at 20% down, or you could have 1 property paid off for the same amount of capital, the same amount of cash outlay. That makes no sense. Wouldn't you prefer to have 5 cash flowing properties? Say if it's a $200,000 property, it's bringing in $2,000 a month in rent. Your $200,000 levered up 20%, right, on each property, 5 to 1, will bring you about $10,000 a month in rent. Or $10,000 a month in rent with mortgage payments, of course, right? So your net on that's probably $4,000 a month or $5,000 a month. Or you could pay off a property that's worth $200,000 and get your $2,000 a month in rent, less no mortgage, but other expenses, of course. Your net cash in, your net profit is way lower. That is why I'm a huge proponent of do not pay your mortgage off. Just don't do it. As you're forced to pay down your mortgage in your mortgage payments, you have a percentage on the amortization schedule that grows over time. Of course, because you're paying down the loan balance, less of each mortgage payment is interest payment. As you start paying down a mortgage, go back to the bank and refinance and pull the money out. After 3 or 4 years just of making your mortgage payments, you've got a down payment sitting in that property for another property. Or better yet, take the money out. If you don't want to buy more properties, you don't want the headache, fine. Go ahead, borrow the money at 2.99% or 3% here in Canada, that's all day long, against property. Go borrow at the 3%, pull out that down payment, fine, don't buy a property. Invest in the S&P 500 at 8, 10 or 12%, let's call it 7.9% because that's the historical return for the last 150 years in public indexes like the S&P 500. Get that 8% return and then pay the bank their 3% interest and get the spread. So you're making 8, you're paying the bank 3 on that money you just borrowed from your property, and you're getting a 5% spread on average. 5% on that $40,000, right? That's $2,000 in your pocket of spread each and every year. $2,000 you didn't have before. So paying off your mortgage is really a bad investment if you think about it. You're really just you're guaranteeing yourself a 3% rate of return. When you make payments on a mortgage that's locked in at 3%, you've effectively just saved yourself 3% in interest you would have paid. That's it. You're investing and getting 3% rate of return. I personally, if I'm going to be investing in real estate by paying down my mortgage, I'd rather just buy more properties. I'd rather have a more diverse portfolio of several different cash streams than one property. One property, you have a vacancy, you have no cash flow coming in. If you have 10 properties or 5 properties, let's say, compared to one, because 5 properties at 20% down requires the exact same amount of cash as one property paid off, right? If you have 5 properties, if you have 1 vacant, oh no, You know, you're missing that $2,000 a month for that month, but you still have 4 other properties bringing you $8,000, $2,000 each for that month. If you have one property paid off, it's vacant for a month, you have zero, nothing coming in. Do not pay off your mortgage. Go get a HELOC on your house, you know, house hack. So make a way for your house to earn money based on space you're not using. So if you have a basement you're not using, rent it out. You have a garage you're not using, rent it out. If you can convert an extra unit, do that. Find a way to cash flow your property in some way. You got a parking space, you're downtown, rent that out. Find a way to cash flow in some way that doesn't obviously interfere with your lifestyle too much. You know, maybe you don't want roommates, you just want to do a separate unit or something, whatever. Find a way to make your property pay its own mortgage. Then the money you're borrowing is free. The mortgage isn't even there. Like, I have a mortgage on my own property. I have the cash right now, I could pay off my mortgage in full. Done. If I wanted to, I could pay off my mortgage tomorrow. I'd have no mortgage payment at all. Do you know why I have a mortgage? Because I borrowed $200,000 that I've then used to buy 4 more properties. Why wouldn't, or even let's say I use it to invest in the S&P 500. I'm still getting a way better spread. Use the bank's money to invest. It's free. Just take it, or it's 3% in this case, which is basically free. And invest at 8%. Your spread is 5% still. As long as what you're investing in generates a higher rate of return safely than the cost of borrowing that debt, you're in a good position. So there you guys go. That's my thought on why you should not pay off your mortgage. And you know what? I think it's a good idea. Spend less, earn more, and maximize returns to unlock a wealthier you. Let me know in the comments if you guys disagree. You're like, you know what? I want to pay off my mortgage. I don't care about rate of return. I don't care if I have a terrible return. I like to have my money in a savings account, 0.5%. Look at me. I like to work